Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, today we're going to talk about a trade I did just yesterday. We did a poor man's covered call trade, but I'm going to break it down for you and show you why I decided to do the poor man's covered call instead of a cash secured put or buying shares and then writing a covered call. We're going to talk about how I use the poor man's covered call when stocks are down, trading near their support. We take advantage of that using the poor man's covered call, which means we leverage our money to be able to write more near-term covered calls than we could had we just bought the shares. So that's what we're talking about today. I'm also going to show you my numbers. We have completed the first 6 months of 2023. I quickly want to show you where I'm at and talk about the goal for the rest of the year. Now, right now, after completing 6 months into 2023, we're sitting at about $86,600. That absolutely blows away what I expected at this point, where I thought I would only be at $50,000. I had a goal of $100,000 for 2023, but here we are, absolutely taking advantage of this sideways to higher stock market, and we're able to generate more near-term cash flow using all the tools in our toolkit. You know, we've done everything from writing covered calls to cash secured puts, using the poor man's covered call, dividend capture. I'll tell you what, love using every single tool in my toolkit to generate that monthly cash flow. So right now, you can really see the difference. Back when I was finishing up the 9 to 5, because if this is the first time here, I retired December 2022, very busy at the 9 to 5, and wasn't able to get off a lot of the trades that I wanted. As we enter 2023, being retired and having the time to really put in the work to generate more cash flow, you could see we're absolutely hitting on all cylinders. God willing, we're going to be on pace for over 170,000, blowing away any annual gain using selling premium since 2016. And 2016 is when I started this. If you've been with me here on the channel, you know that back in 2015, Jerry, my mentor, best friend, he showed me the way. Here he is, some 30 years into retirement. He's talking to me and he says, look, you're frustrated, day trading, swing trading. You have no success. For the past 30 years, I've been funding my retirement by selling premium. Let me show you how I do that. And it was just that simple. And then I kept meeting him at the gym, asking him questions, chasing him because I was hungry to be successful. I had no idea of how much money I can make. It was about being successful. And when we want to be successful, everything else falls into place. And I'll tell you what, right now, I am absolutely on top of my game. We're going to talk about a trade for which I did my research, showed the members, and I actually executed on the trade. Now, there's two things you need to know. You can go to my website, cptdashboard.com, and get the free Poor Man's Cover Call Tracker I'm about to show you. And if you're interested in anything I'm about to show you, where I send this out to my members, we talk all the time, trade ideas, whether they be Poor Man Cover Calls, standard covered calls, cash secure puts, dividend capture. If you are interested in having a successful active trader, seeing the world through his eyes, my membership is waiting for you. I literally have a 1 free month offer, and the commitment is nothing. You sign up, you don't want to stick around. I'm not going to needle you, right? I got so much on my plate. I'm not going to worry if you come or go. But what I'll tell you is this. Once you get on board, I make sure this is one of the best experiences you've ever had. And I'll tell you what, this trade is a great example of what my members get all the time. CPTDashboard.com, click Upgraded Dashboard, get your 1 free month, but more importantly, download the free Poor Man's Cover Call Tracker. No spam, no email. Use the Poor Man's Cover Call for your initial trade setup and tracking your investment. It's all free. Be sure to go there, download it, use it. So we are talking about Las Vegas Sands. Recently, all of the casino stocks have been battered. And Las Vegas Sands had really good earnings last time, right? So it has fallen tremendously over the past couple weeks. And I noticed that it's fallen to its near-term support. So for me, I'm looking to make an investment in Las Vegas Sands. Do I want to use a cash secure put? Do I want to buy shares and write a covered call? Do I want to use the poor man's covered call? So in this case, I did some homework and I sent it to the members. This is an example of a trade alert that I sent to the members. At this point, I have no skin in this game, and I tell them as such. I'm watching it, and I want you to watch it too. Notice that it was down 5% on this day. And I'll tell you what, it was right for the pick, and then I should have taken action. But I didn't, because I'm reacquainting myself with Las Vegas Sands. I haven't used Las Vegas Sands as a covered call or cash secure put play in a while, so I want to do a little due diligence. So I'm looking into why Sands is falling as it is. All of the casino stocks are falling. And sure enough, it really has to do with consumer spending and the overall economy. No particular news is causing Sands to be down 5%. So I'm looking at the charts now, and this is what I showed the members. And the chart's obvious here. And look at the support level at 55. 55 gets tested right here. And although this is not 55, what I want you to notice is this. This is support, but notice this is resistance. This is resistance. Once the stock gets through that resistance, right? Once it gets through that resistance and stays above that resistance, now this becomes new support. Now, fast forward many months. As it's trading and it falls, the rest of the market seems to fall a little bit, and it retests that 55 number. And of course it pops, and now you can see Sands is trading in what seems to be, no pun intended, a sandbox. Oh, I know some of you just rolled your eyes. Well, here's the deal. We get this nasty sell-off, and look where it goes. It heads directly to that 55 number. So I'm thinking to myself, if ever a time to get involved with Sands where I believe that its fair value is at a certain support line, I believe it's going to be 55. So at 55, I'm going to plant my flag, okay? Let's paint a little flag here. We're going to call it CPT. So I want to make an investment. So what am I going to do? I let the members know that I was going to consider a poor man's covered call by buying a leaps option today, possibly waiting to write a covered call until the next day. Because remember, this thing is down 5%, getting beaten down 5%. So if I buy the leaps call option, which by the way is a golden rule of mine, we buy the leaps call option on a down day. Then what I'd love to do is immediately write a covered call. With it being down 5%, you know I'm not going to get any value for a call op. So in this scenario, or in this situation, I'm going to buy the leaps call option and I'm going to wait for a green day, because I believe a green day is coming. It's been selling off. I believe Wall Street will come back to it as it's found its way back to support. And if it holds support, it could move higher, and they can catch that little dead cat bounce. Well, that's what I was going to wait for. Let's now look at the trade I ended up doing and talk about it. So as I've told you over the years, you have to set up that very first trade, making it as favorable as possible. Where the stock goes after our first trade, who knows? Nobody has a crystal ball. But that first trade has to be set up right. And the only way we do that is having an initial trade setup calculator, and that's what I want you to download. The Poor Man's Covered Call Tracker has the initial trade setup in it. And what we want to do is plug in the numbers. Now, my tracker looks different than yours because I'm constantly using my tracker. I have it set up to where if I paste in the data from my brokerage, it fills in all these numbers. You'll fill in all the numbers that are yellow. Now, here's the deal. When I set up for the 95 Delta, you see the 95 right there. That is a leaps call option I want to purchase. For me, I love that particular leap because as the stock moves $1 higher, this leaps call option that I purchased will move 95% of that. Okay, so I'm going to buy the 33 leaps call option, and I'm going to pay $23.70 to have the right, but not the obligation to take somebody's shares away from them at 33. That gives me the ability to buy somebody's shares to ultimately give them to somebody if I write a near-term covered call and my shares are taken away. Air quotes. I don't own shares, but I have to produce shares later in this trade if my near-term covered call is successful and I have to pony up some shares. Okay, so understand, The poor man's covered call, you do not own shares. You own a Leaps call option in lieu of the shares, so you can ultimately be able to purchase shares from somebody to give to the brokerage so they can then give to that call buyer. It doesn't exactly work like that, but that's the picture I want to paint for you. That's the most simplest way to describe the poor man's covered call strategy. We're going to use less capital up front. We're going to buy a Leaps call option in lieu of the shares. We are then going to write a near-term covered call as if we own the shares, but instead of owning the physical shares and paying all that money, right? $5,500 is what I'd have to pony up to buy 100 shares. Well, in this case, when I buy the right to take somebody's shares at 33, I pay $2,370. So I pay $2,370 for the right to own somebody's shares. That gives me that ability to write a covered call in the near term. But for this initial trade setup, here it is. Now the question is, how much do I pay for that right? See, nothing's free, and I have to pay for the right to take somebody's shares at 33, right? Somebody has to write a covered call, and they're picking the January 2024 strike price to pick up premium. That's what has to happen, right? There has to be somebody writing a covered call for the 33 strike, the January 2024 expiration, for me to be able to buy the right from them. So the question is, how much money do they make, or how much money do I pay, right? Because I'm buying this option, I have to pay that premium. What we're looking for with great S&P type companies, we want to pay less than 1%. We want to pay less than 1% because that is our cost of this trade. The cost of the trade is not $23.70, right? Because we have intrinsic value and time value in any option price you see. And because we're buying the deep in the money 33 and the stock's trading for 55x, do you see where this option, where I pay $23.70, has all of that intrinsic real money in it? Meaning the option seller, right? This covered call seller does not make that $23. What they make is the time value portion, and that turns out to be 87 cents. So that is my true cost of this trade. The true cost to have the ability to take somebody's shares at 33 is 87 cents, because the other portion is intrinsic value. That person doesn't make anything, and I'm not paying anything extra than 87 cents. I love the 1% rule when it comes to buying my Leaps call options, where I only pay 1% or lower. But in this case, Sands is a little more volatile. And it is an S&P type company, but it's a little more volatile. The premiums are a little bit higher, so I'm going to have to pay about 1.56%. So I'll do that. I'll do that for this trade and this setup. Remember, think of where the stock's trading. Remember that it's a little more volatile, so covered call premiums are a little more juicy. And more importantly, Sands is a huge, huge company. We're not talking about a fly-by-night company, okay? So now this is the setup. And what I want you to notice is this. When we select the 56 strike, stock's trading at 55, when we select that 56 strike, which is literally 17 cents out of the money, we collect $1.87. Now, that doesn't sound like much, but when we're only investing $2,370, making $1.86 on this trade, turns out to be, if our shares are taken, and again, we don't have shares, we're going to have to manage this trade where we unravel the near-term covered call and then sell our Leaps call option to realize this profit, okay? So if our shares are taken, meaning we make the stock move from 55 to 56 and the covered call premium, this is a 8.53% cash on cash percentage gain based on the money invested. If the stock does not finish above 56, we make in covered call premiums based on the money invested 7.89%. Now, what's very important here is this, your original trade setup, looking at the charts. See, if I do this when Sands is trading at the top of its range, just like any other stock that has rallied, Wall Street likes to take profits. So what we need to do is always try to be diligent to get involved when a stock is trading at the bottom of its range. You hear me saying this all the time. Why? Look, nobody has a crystal ball, but it's more favorable for the stock to move higher. It's more favorable every time it touches that support line that it'll go higher. Does it mean it's going to go higher? Well, of course not, but it's more favorable. And we want to put ourselves in the most favorable position as we invest our money, right? We just do not want to be throwing money around at the top of these ranges. So I would rather take my chances and use those stocks that are trading near the bottom of its range. Maybe we get that little move higher, and it allows us to be successful more frequently. And in this case, it turns out to be a favorable first day in trading. What ends up happening is this. I send that email to the members. It's a trade alert. I have no skin in the game, but I'm eyeballing it. Sure enough, the next day, I was not able to buy that Leaps call option. But sure enough, the next day, it was down fractionally. So I slipped in. We went ahead and bought that Leaps call option. And then we turned around and sold that near-term covered call we talked about. Let me show you what I sent to the members as I actually did the trade that I sent. See, that's what I love to do. I am out there putting in the time, doing the homework, doing the due diligence. I love these trades, so I actually put them on myself. So this is what I did. Feeling very confident in this trade, I went ahead and did not use money to buy one Leaps call option. I went ahead and bought 10 Leaps call options, amplifying my near-term covered call returns. And I'll tell you what, I almost did 20. We went with 10. We left a little bit of money on the side that if the trade goes against me, I'm then going to double down, as I believe Las Vegas Sands is one of those companies that is profitable. And as I showed you, that 55 support line looks very strong. Again, no crystal ball, but I like it. So this is the trade I put on, and I sent this to the members. Las Vegas Sands is getting absolutely crushed, and I felt that that support line of 56 was pretty bankable. So I went ahead, bought 10 Leaps call options, and I went ahead and bought that 33 in the money strike, paid $23.70. Notice it's the 96 delta, so that means for a $1 move in the stock, my option will move 96% of that. And we went ahead and placed the trade. Near term, 30-day covered call cash flow is $1,890. And now what we're going to do is this. We're going to manage this trade, because should this trade continue to go higher, that means I'm going to have to buy the near-term covered call option back at a loss. But then I'm going to sell my Leaps call options for a profit. And that's how I will collect my entire 8% that I showed you earlier in the video. Now, if the stock were to not cross 56 and trade lower, well, I'm going to collect the entire $1,890, and we're still going to own the Leaps call options. We're still going to continue to write near-term covered calls. We're going to continue to use the tools in our toolkit to achieve the cash flow goals. Even if they're up or they're down, we're going to stay the course, and we're going to continue to put cash flow on the table. Because at the end of the day, the bills do not stop. And that's what I always tell the members. We have to stay the course. Bills do not stop. It's about mindset. Successful traders have a successful mindset, okay? Stick to the game plan. We make investments, we sell premium against them, whether it's cash, whether it's shares. That's what we do. And if you're not doing that, then you're not sticking to the plan. Look, at the end of the day, it's about generating cash flow to pay the bills and live the good life. Go to cptdashboard.com, click Upgraded Dashboard, get your 1 free month, download your Poor Man's Covered Call Tracker. Definitely want to keep the numbers in front of you. And hey, look, if you've never been to my Facebook group, go to Facebook, type in Real CPT Dashboard, follow my page, because that's my off YouTube discussion where I constantly post up things for those that follow me there. You know what I'm going to do? This week, I'm going to post up an exclusive trade idea for the Facebook group. Absolutely love the support I get over there. Absolutely always trying to up your game. Seeing the world through my eyes, I show you timely and relevant covered call trades, so maybe it ups your game. Hey, look, Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.